Hi everyone, welcome to FOREX Trading Empire live top-down analysis. And we have been doing this top-down analysis every Monday at 12 p.m. Western Time. So the top-down analysis, I go through major pairs that I do trade, which are the Euro USD, GBP USD, USD JPY, and the major currency in which we use for correlation to those currency is the dollar index. So first, we do analysis on the dollar index to know where the dollar index will be trading to for every individual week. Try to see what's going to be the draw on liquidity and what's going to be my thought process throughout the week. So I give you guys my own personal thought process on what I would do if price were to trade to a specific direction or to a specific way or run a specific liquidity. And so far, we have been doing this top-down analysis every week, and I've been trying my best to make it more transparent as it is and try to give you guys a clear direction on where I'm looking for price to trade to. So there was a comment on the last top-down analysis where you guys asked, why do I always tell you guys what price would do and what I would like price to do? Now, why I do that is that I'm trying to tell you guys that currently price is looking at this liquidity, but I will look at price to see if price will trade to my own perspective or to my own idea. The point is that we are trading based on price action and what is the drawn liquidity, what price is most likely to do. Those are the key factors I do look before actually deciding on a bias, which I've been giving you guys my personal bias for around 4 weeks, I think 4 to 5 weeks now, since I started doing the live top down analysis. So this week we're talking about dollar, which currently we're on the daily time frame of the dollar index. Last week I talked about price trading higher to run the buy side liquidity. I told you guys that is my overall bias is to see price run the buy side liquidity. Then I will be looking at where price will be using as a support area to trade higher, which I pointed out this red rectangle and I pointed out this initial order block. I explained why I'll be looking at this consistent down close candle as a support for price to trade higher. And if price were to trade through it to trade to the other block, why I will be looking for higher prices for price to run the buy side liquidity. All was explained on last week's top down analysis. You can check it out on the YouTube channel. You just go to the live section and you go through the dates and find out last week video to go through the video. So last week I anticipated higher prices, which you can see clearly. Monday traded higher, Tuesday did the same, and Wednesday traded through a daily fair value gap. Thursday took out the buy side liquidity. Friday retraced to the daily fair value gap, used it as a support to trade higher, running out Thursday's high. That was all for last week. Now, going into this week, what I'm currently looking at in price, currently this week, I'm looking at a retracement to run the sell side. I don't have an overall bias for the whole week. I currently have a bias for, let's say, today or tomorrow. Point is that price just took out a buy side liquidity. There might be a chances of price doing a continuation to trade higher, and there's still a chances of price retracing, trading through this daily fair value gap. And the fact that last week price did a retracement to the daily fair value gap to run equal high, did a 1 hour shift, which is leading to this retracement, which I explained I'm looking for price to run Friday's low. Now, I will explain what I would do whatever price will be doing. Now, first, if price were to trade lower into the daily fair value gap, to trade through the daily fair value gap, then I will be looking for a retracement to the other block. I will be looking for a retracement to the other block. So I might take counter trend to anticipate price to trade to the other block. But the fact that the fair value gap is close to the other block, I will say that will be a difficult bias for, let's say, new traders to trade with. You need to understand daily delivery. But if you can understand CRT, well enough to know when there will be a continuation for price to trade lower and when there is a reversal for price to trade higher. I think you can take advantage of this week's setup, but you need to take your time when going through this week trade analysis. The point is that you want to put a lot of thought process to this week because price is at a very delicate stage at price running this buy side liquidity. And in other currency, which I will explain the issue in that when we get to Euro USD. So on the 1 hour time frame, this is going to be my major time frame this week. This is where I will be looking at those key features on price telling me where it will be trading to this week. Which currently I'm anticipating lower prices for price to run the sell side, and we can see a price respected the other block this morning, traded lower, took out the swing low, and currently price is below the opening price of the week. Price is below the opening price, and we might see lower prices. So how far will price trade lower? Depending on how price takes out the sell side liquidity. If price takes out the sell side liquidity and there is a 1 hour or 4 hour shift in structure inside the daily fair value gap, I will be anticipating higher prices to run the high. But if there is a continuation where price is trading through the daily fair value gap, I will be using daily fair value gap as an inversion fair value gap to anticipate lower prices. So mostly depending on what price we'll be doing inside the daily fair value gap. But if I were to pick a side, I will be picking the side in the idea of looking at price to trade through the daily fair value gap. Let's go to the daily time frame of Euro USD. On the daily time frame of Euro USD, I talked about this daily fair value gap that if price were to trade below the daily fair value gap, use this as an inversion fair value gap. So the next draw on liquidity lower, which is this fair value gap but at the same time pay attention to the new week opening gap. So the reason I was talking about this week is that when you go to the dollar index, price took out this high on the dollar index. You can see price took out the buy side liquidity on the dollar index. While if you go to Euro USD, price did not run the sell side liquidity. Remember, they are correlating pairs that trade, I can say 90% the same. So whenever there's an SMT in price where in a correlating pair where the first currency takes out a liquidity and the second currency did not take out the liquidity, it brings an idea of telling you that there's a big correlation in price, that there is an SMT that might lead to a retracement in one currency. And that currency might be Euro USD. Currently, I'm not fully confirmed on which currency will lead to that retracement for price to trade higher or lower. We might see lower prices after a run on Friday's high. We might see lower prices after the run on Friday's high. That might lead to lower prices for price to trade lower to run the sell side liquidity. But at the same time, we might see a continuation for price to trade higher. So I will tell you guys to base your bias from the dollar index. Because of the SMT on Euro USD, you should base your bias off the dollar index. And this is not only on Euro USD, you can still find the same price action on GBP USD, which when I get to that currency, I will explain. So on Hero USD this morning, I was looking for higher prices because I was aligning with the idea of dollar trading lower to run the sell side liquidity. I was looking for price to run Friday's high, which you can see there's a position to which I did set. But this week on Hero USD, I will be sticking to whatever dollar will be doing. Is either price will be going for the sell side liquidity, or we might see a retracement if the dollar were to trade lower through the daily fair value gap. On the 1 hour time frame, sorry, let me take this out. You can see price missed my initial entry It was this sort of block. Price came close but did not actually trade it to my entry level. So let me take it out. But you can still see the idea is still the same, looking for higher prices to run the buy side liquidity before actually deciding on the bias. So run on the buy side liquidity. If price were to run the buy side liquidity, trade through the daily fair value gap, use the daily fair value gap as an inversion fair value gap to anticipate higher prices going in this week. But if price were to respect the daily fair value gap after a run on Friday's high and we see a shift in structure lower, then you anticipate lower prices and your target should be Monday's low and overall sell side liquidity, which means there wouldn't be any diversion in price. But at the same time, pay attention to that diversion in the dollar index and Euro USD. I did not actually mark it on the chart, so let me just mark it out so that next week I can explain on what price did from the SMC. So this is smart money diversion on Euro USD and the dollar index. Ideas is still the same. Run on the buy side liquidity, which will be the immediate bias going in today or tomorrow if price haven't run the buy side liquidity. Just pay attention to a 15-minute point of interest and a 1 hour point of interest for price to use to run the buy side liquidity. After the run on the buy side liquidity, a trade above the daily fair value gap will lead to a continuation higher. But if price were to respect the daily fair value gap, not trading above the daily fair value gap, and we see a shift in structure might lead to lower prices or price to go for the SMC low. That is depending on what dollar will be doing. So pay attention to the dollar index going in this week. Next is GBP USD. On the daily time frame of GBP USD. Now GBP USD still the same. You can see price did not actually run out the sell side liquidity on GBP USD. So there's still the same SMT on correlating pairs. Hmm, Sorry, on correlating pairs, still the same SMT. Price failing to run the sell side liquidity last week, while on the dollar index, price did take out the buy side liquidity. A retracement to this daily fair value gap is currently what I'm currently looking at in the GBP USD this week. Price already took out Friday's high, still looking at price going for Thursday's high, which you can see I'm currently in a trade anticipating higher prices to run the high. Once price trades the daily fair value gap, a trade above the daily fair value gap will lead to a retracement higher, while if price were to respect the daily fair value gap will lead to a continuation lower. It's depending on how price will be trading inside the daily fair value gap. But at the same time, pay attention to the GBP USD order block. Pay attention to the mid-range of the order block. The mid-range of the order block might lead to a retracement lower. Regardless of what dollar will be doing, pay attention to the dollar, to GBP USD points of interest, and the 2 points of interest for you to pay attention to is the daily fair value gap and the other block, this specific candle. 1 hour time frame, you can see the counter shift in structure. Looking at price respecting this other block, which price came close to my stop, but I still haven't been stopped out from the trade. But still the same idea, anticipating higher prices to run out Thursday's high and trade to the daily fair value gap. If price was to keep on trading higher, looking at price trade to the mid-range of the order block, depending on how price will be trading this week, and try to find the correlation in dollar before actually taking any trade in this currency. For those that do trade GBP USD, but still the same idea, higher prices to run Thursday's high. Next is USD JPY. on the daily time frame of USD JPY, last week USD JPY created a new swing high, and the next drawn liquidity is the buy side liquidity. From looking at the side of the charts, price already traded through both most liquidity areas from this side, and the next drawn liquidity, which is very obvious, is this buy side liquidity. And currently, price is in a daily fair value gap, which might lead to a continuation for price to trade higher to run the buy side liquidity and overall to the initial target. On USD JPY, you can see the bias is very basic. One of the most basic bias you can see in price, where price created a swing high from a point of interest, retracement to that point of interest. Then you look for higher prices, you look for that lower time frame shift to run the buy side liquidity and lead to higher prices. Now, this is a basic pattern, it's a very basic structure. Now, the point about this structure that I will be taking account will be the dollar index. I need to see some sort of correlation on the dollar index to this idea before actually taking a trade. I know I do talk about correlation a lot whenever I'm trading currencies. The point is that when you are trading major pairs that is correlated with the dollar index, you need to take full account on what the dollar index is actually doing. That will give you that big edge in your trading strategy and save you lots of losing trades, save you a lot from losing trades because I tried trading it without adding up the idea of the correlation, and I can say I didn't get much of an attraction to what I was actually aiming for. But since I added up correlation, I did see a lot of improvement to the trading idea. So on the 1 hour time frame, currently you can see the structure is very aligned with that idea of price respecting the daily fair value gap. Since price traded to the mid range of the daily fair value gap, led to the shift in structure. Monday, price have kept on trading higher, did another swing high, taking out this buy side liquidity. Retracement, currently price retraced to a 1 hour fair value gap, currently respecting the 1 hour fair value gap. I might see higher prices for price to run the buy side liquidity. Now, is this correlated with the dollar index? Which no, it's not correlated with the dollar index. There's still some component that is still not aligned with the dollar index in me taking a buy. Because if I were to take a buy from this, which means I will be anticipating the dollar index to trade higher, which currently my bias on the dollar index is to see lower prices. So one of them might be wrong. It might be the dollar index or it might be the USD JPY. With the USD JPY do have a strong potential of it being the right currency that is fully aligned with its direction in price running the buy side liquidity. Now I'm ready to risk out this trade of me not taking advantage of this setup for price to run the buy side liquidity in a sense that it's not fully aligned with my trade plan. My trade plan is to see a strong bias that is aligned with the dollar index and a strong structure which is aligned with the dollar index. When I have both correlation, those are the times I do take trades on those currency. So now that they are not aligned, I can say I'm not actually going to be taking any trade for now till I can find that alignment in price. Maybe after price takes out the sell side liquidity on the dollar index and there's a chances of price trading higher, then I will be looking at higher prices for price to run the buy side liquidity. Now you can plan your own trade idea by taking out this trade directly. The point is that I might be wrong on me waiting for that right correlation before actually taking a trade, or this is the right thing to do currently now, but you can actually tell. The most part is that stick to your trade plan. If you're missing out any trade because of your trade plan, those it's kind of your advantage because there are many chances in price where waiting for the right correlation saved me a lot from me not actually taking a loss on a trade because I was actually waiting for the correlation before price took out the stop loss because the trade was fully aligned with my bias, but there was no correlation to the dollar index. So At the same time, it do save me for some trade, but at the same time, I do miss out on good trades because of those correlation. So before adding correlation, you should take account of that because of the correlation, there might be some times where you'll be missing out on good trades because it's not correlated with the dollar index. But the bias is still the same, price respecting the daily fair value gap, leading to higher prices. But if this daily fair value gap were to fail, let's say the dollar index kept trading lower, if USD JPY were to trade below this daily fair value gap, then you should look at the daily fair value gap as an inversion fair value gap to anticipate lower prices to a daily point of interest, which that daily point of interest should be below the daily fair value gap. The next strong liquidity should be the other block, and here is the other block. Then we might see a counter trend to the other block. Remember, you need to be skilled enough to trade a counter trend. You need to understand price action well enough to trade counter trend. But the bias is still the same. Higher prices, if the dollar were to trade higher, then we will be taking advantage of this trade. But lower prices, if the dollar were to trade lower, we need to see that correlation before actually taking any trade. So let's talk about gold. So last week on gold, I talked about this daily fair value gap when I talked about this daily order block. So let's go to the daily time frame. If you have watched last week's top down analysis, I talked about me looking for higher prices for price to trade to the buy side liquidity. I told you guys that was my overall bias is to see price run the buy side liquidity. At the same time, I told you guys that the only way that I will be trading against this bias is when I see price go below the mid range of the other block. If price were to go below the mid range of the other block, then I will be anticipating lower prices for price to run a sell side liquidity and this sell side liquidity. But last week on Monday, price traded lower, traded through the daily fair value gap, respected the other block on Tuesday, which there was a very classic entry that led to higher prices and price traded higher to the daily fair value gap, which I will be indicating with a blue. Price rate the daily fair value gap, although I was still anticipating higher prices for the overall bias for price to run the buy side liquidity. But after NFP news, price traded against the bias did a correlation to dollar, where dollar did trade lower, and that correlated with the dollar that led to lower prices on gold, trading against the bias, trading back to the daily fair value gap. And so far, price have been in that range, been on last week range inside the daily fair value gap. On the 1 hour time frame, you can see the shift in structure. You can see how price did the shift in structure, and this was the actual trade. The trade was already around 4 hours before the retracement that stopped me out somewhat at the break even, but most time I already closed half of the position. As soon as price trades above 4 hours, half of the position is already closed. But that was the idea in this setup. Anticipating higher prices, the overall target was to see price trade to the buy side liquidity. But you can see how price traded to a 5 hour before actually retracing and was stopped out from this swing low, where price traded lower, took out the swing low. Now, going this week, looking at what price did, I would like to see a major run on liquidity. I want to see price trade lower at least to run a previous day low or respect a daily point of interest before a shift higher. Then I will be looking for higher prices for price to trade higher. Now, that's the reason I don't trade gold that much. When it comes to consolidation, when I have a bias, Sometimes price will consolidate and later it will trade to my initial bias or my next drawn liquidity, which I'm looking for price to trade to on gold. But I've seen many examples in on gold charts that lead to this type of price action. The same thing goes to the bias in which I told you guys that I will be anticipating higher prices for price to trade higher. That was later on when I started talking about gold on the live top down analysis. I talked about this price action. For those that have watched it, notice that I talked about price trading higher. The initial idea was that price will be using this other block as a support area to trade higher. Well, you can see how price did some sort of consolidation before actually running out the stop losses below, running out sell side liquidity before actually trading higher. I'm still looking at that same example here. Price might do the same price action to trade higher. But at the same time, pay attention to the daily fair value gap. It will play a big role to how price will be trading higher. And to this fair value gap too, trading above it for price to use it as an inversion fair value gap to run the buy side liquidity. But overall bias is to see price, respect it, and use it as a support area to run the buy side liquidity. Now, I would have asked you guys to give out the suggestion on any currency I should explain on, but I think that will be all for this week. If you want me to add up another currency to the top down analysis, you can just leave it in the comments section. When I'm going through the comments, I will be adding it up to. I will take a consideration to add it up on next week live top down analysis because someone told me to talk about Bitcoin, but I won't be talking about Bitcoin in this live top down analysis. So that is all for this lifetime top down analysis. See you guys in the next week top down analysis. But make sure to check the trade review, the top down analysis trade review. I post a trade review every Sunday morning based off my own personal time, Western time. I post a trade review talking about the trade I did take advantage of on this live top down analysis that I just did. So you can use it to know on what are the specific areas I use for my entry and how I take advantage on the lower time frame. It will help you out for you to go through those live top down analysis trade review. You can check out the YouTube channel to check out last week top down analysis trade review to understand how I do structure this top down analysis that I do every week. But that is all for this top down analysis. See you guys in the next one.